G'day, it's Jason from iChoice. I'm making this video for first home buyers. I wrote a very tiny little ebook called 5 Things About LMI the Banks Won't Tell You. And I thought I'd spend a few minutes just putting it on video for those of you who prefer to watch rather than read. So first of all, what is LMI? When you need to borrow more than 80% of the value of a property, that's the comfortable mark where a bank is. They want to be protected. So LMI does not stand for loan mortgage insurance. It has nothing to do with protecting you or your insurance or your mortgage or your lifestyle. It is a premium that the bank wants paid to protect them because they're overextending over an 80% loan. So first of all, it's not insurance for yourself. It's LMI is a one-off premium when you take out a loan to protect the bank, but you must pay for it. Now, a couple of things about that. First of all, if you go direct to a bank, you're really missing out because all the banks have different LMI premiums. We have software that very clearly lists when we put in the loan amount and the LVR. So if you're borrowing 92%, it's more than 91%, for example, over $500,000. It's really important to understand the thresholds. Going direct to a bank, they probably won't do that for you. They certainly won't tell you that other banks have cheaper LMI premiums than them. So I'm happy to run all that through the software for you to determine where it's cheapest. The other thing is that so many people go to a bank and get a 90% loan. It just fascinates me because if you borrow an 89.99% loan, guess what? You might save about $3,000 on LMI. It's quite ludicrous that you can borrow $100 less and the LMI premium is about $4,000 less. How criminal. The banks don't tell that to young people, yeah? Another thing I would like to talk about is that some banks actually do 85% loans and don't charge LMI. There's a couple of lenders that do that, and I know Westpac comes in every now and then and has implemented that policy for a short time as a special. If you have a good mortgage broker backing you, you'll know about what's available for you at the time. The third thing is a lot of people don't really understand the family pledge product, but essentially you can borrow 100% of the value of a property as long as your parents or another guarantor can come in and just provide a guarantee for that 20% deposit that you don't have. You can in fact borrow 104% of the purchase price, so it includes a stamp duty as well, and not have to put in a cent, and the guarantor can cover that, and the LMI premium is zero. To make it even more comfortable for the guarantor, if you only need a 5% guarantee from them, it would still save you, and you can cover the whole 15% and get 5% from the guarantor. That makes LMI so much cheaper as well. And with that family guarantee, if you go direct to the bank, you might not know that some of the banks don't need the guarantor to be working. Some banks do require that the guarantor is working just in case that guarantee is ever called upon, that they can actually service that over a short term. And the final thing I'd like to talk about is that if you are buying something off the plan, let's say for $500,000 and you need a 90% loan or 89.9% loan of about $449,000, you will be required to pay LMI at the end of that. But there are some lenders who after a 12-month period will be happy to have that property valued, and if it's gone up in value, they go off that. So your LVR might not be 90% at all, it might be popped back to below 80%. So it's important when people are buying off the plan, they know which banks are dealing with in terms of flexibility, which banks they're speaking with about interest rates, about changing policies, how likely they are to change, what their registration policies are, what their concentration issues are with certain buildings, but also understanding how their LMI is treated and whether they'll go off the higher or the lower of valuation or purchase price. Thanks for watching. We've got your back if you get in touch with us on 02 9743 0000.